Welcome back to another Ticks and Trades daily recap for Friday, January 24, 2025. I am Sam Morton. On Friday, the SPY closed below the former all-time high after closing above it on Thursday, the day before. I'm coming at you on Sunday evening. You can see the time down here. A couple days later, we'll come back to this chart and talk about the big picture later. But first, let's look at the game plan that was sent out to subscribers on Friday morning before the opening bell. You can see the daily levels that were identified, and you can read through the notes. And here is how the SPY looks currently after Friday's close. 2 of our levels were hit, and the resulting 2 trades produced a net loss for the day if you were playing by the rules and treating each level and managing each trade as a process. So here's what happened. Trade number 1 should be pretty easy to see. It was a long trade in the E-minis that happened around 10:40 a.m. when price bounced from 609.07. I'll zoom into this area so you can see a little better. There is your base hit. Didn't take very long. A few minutes later, and there is at least 4 points in the E-minis. And they bounced from this level one more time. But according to the rules of the strategy, the first long trade was the only long trade that was valid for that level. Oftentimes, a level will work multiple times, but I just don't trust it more than the first trade. There's no guarantee that it will work again. I found that if I'm willing to take just one trade at a level the first time price hits that level, and then ignore future times when price may approach the level from the same side, in this case like another long trade, then I end up with more base hits over time. If you traded a second or third time and that level didn't hold, like what happened here, the third time they came down into it, you could get yourself into trouble and likely wipe out the gains from that first trade when the levels hit over here. And when price gets under a level, it's more likely that the level will act as overhead resistance if price gets back up to it the right way from the underside. So anyway, that was official trade number 1, a solid 4-point base hit. And then level at 607.70 was a long trade in the E-minis 2 right here. We'll zoom in a little bit. We'll zoom in for the rest of the day here. This did not provide a bounce initially. In fact, when price got under the level and hit it again from the underside a couple times, the likelihood of that long trade working out was diminished. As I just mentioned, when price gets under a level like this and starts to give certain clues, it's the market's way of saying that the level will probably now become a barrier for the bulls to fight. So being on the short side is the preferred position. But if you went long at this level, which is the thing to do per the rules, you'd still be in the trade. So like, would you reverse the position and go short when price came back up to the level from the underside, like over here, for example? How would you manage the trade while it was out of the money down here? Well, there would have come a point when you would have reversed the position and taken the 7-point loss as a fumble. The expectation at that point was that price would be more attracted to this level farther down and that price would continue to go lower and that reversal would pay off. But it didn't work out. Instead, price went kind of more or less sideways for a while. And because the close of the regular session is at 4 p.m., I have a rule about when to close out a trade like this if there has not been a base hit profit realized, like you did get the bounce up here somewhere, and time is running out. In this case, closing out the trade at the appropriate time would have meant a loss of an additional point. So 8 points total. They did get back into the money toward the end of the regular session, but holding on to a trade for that long at that time of day is not a gamble that I'm usually willing to take. That's the beauty of having a set of rules to follow. You won't necessarily get the most out of every trade, but since there is a process to follow, you can rest easy knowing that over time the process has a long-term net positive result. Very good results in my opinion. Speaking of which, we'll look at the tracking logs at the end of this recap video to see how these trades stack up with the rest of the trades so far for 2025. I want you to see the rate of return that is possible using this strategy over the long term. And what better way to show that than to share the results of every trade at every level, every day. I'll show you a recording of the one trade that I took on Friday. It wasn't at a level, but it was based on some info that I saw in real time. I'll start this. You notice the time is 9:54 a.m. After it looked like price had topped out earlier in the session and they were coming back down, I jumped on board with a couple contracts and pulled 5 points out pretty quickly, and this is what it looked like. So after getting that $500, I decided that I didn't really want to trade the next level down. It wasn't because I didn't think it would work for a bounce. It was more that I was juggling things at work on Friday and didn't want to risk not being able to pay attention to what was going on during this time. So I'll just scrub ahead here after that trade was satisfied, and just scrub ahead just to show you the rest of the day. Nothing other than just occasionally observing what price was doing. Took no more trades other than that quick short trade earlier in the morning. So let's let this run till the end of the day, actually. So back to the daily chart. We got that little pullback that I expected to see on the previous day, on Thursday. And by the way, since I'm making this recap video on Sunday evening, where's my clock? Here's what time it is. I can see that the futures have already gapped down. Here's a 15-minute chart of the futures, and they're, what is this, maybe 60 points or so already under where they closed on Friday. So I think it's worth noting that. They got under and closed under this level, this 609.07. That's a former all-time highs, and I think that's worth considering what's going on here because they did not have to do that. The bulls have been strong for almost 2 weeks here, and they got price above 609.07 for one day, and then instead of holding on to that position, the bears were able to get price back under that important level by the end of the week. So far, at least, the futures are starting to look like they want to get price pushed down even more by tomorrow morning. We'll see. The main takeaway I see on this daily chart of the SPY is that the timing component of what price was doing up here is still probably on the table. Let's go over to a 2-hour chart. Here you can see a nice doji candle that happened the first 2-hour candle on Friday. That's this top candle here. It looks like a little cross. Price opened and closed basically at the same place after the bulls and bears kind of battled it out for the first 2 hours. When you see a doji candle like this after a prolonged trend in one direction or the other, chances are increased that the trend will likely change for the next candle or two or more. There are other clues to look for to validate that a trend change is likely. But when price was up here on Friday, they were in uncharted territory. So they went up to a certain point and pulled back pretty immediately. So I'm always curious to see if I can find a reason why price does things like this. Like, why was this place important? They went up to 610.78 and price was rejected there. So was that an important area? I did find one possible reason, and it's not something that was on my radar on Friday morning when I was doing my analysis and it didn't define levels, but we can check it out now. So I'm just going to remove the former all-time high. So we're talking about 610.78. I had a zone higher up on Friday that I identified a different way, but here's something I've noticed. If you look back in time, you'll notice that you see all these places that price is going up to, and they hit a new high and they pull back. Each of these areas here, you can call a pivot. Whether it's a pivot high or a pivot low, it's usually an important place in the future if price ever gets back to that same place. Like, for example, just look to the right of each of these pivots as I hover over them, like right here, and just notice how price reacted at that same level in the future. There was something going on at some point. So you can see that usually the next time price gets to that same area, there's some kind of reaction. Keep in mind, this is a 2-hour chart, so what might look like a small reaction is probably plenty big enough for a base hit or more than 1 or 2 base hits, the way we trade using our approach. You can use pivots in your analysis in several other ways as well. So here's a pivot on November 11. So at this time, price had never been to this point again. They got to a new high, and the SPY pulled back for quite a while. So this, you can assume, was an important area. This is right above SPY 600 at the time. So price made a new high, and they made several lower highs as they kind of rolled over for a while. So this right here that I had on the board earlier, the 607, whatever that was, 609.07, was the most recent high until this past Thursday or Friday. Not much is happening until all of a sudden, price just plummets from the middle of this area, this consolidation area. So I'm going to assume that from where price fell is pretty important. Call it around 605.50 something. So this high, this big breakdown candle, if I snap a line from this pivot high here, back on November 11, and the high of this breakdown candle happens to be where price on Friday met some overhead resistance. They pulled back like not an insignificant number of points from that area. If they fall farther and keep going down like what we're seeing in the futures now, then this new pivot area will probably be important in the future. But for now, it's just a way of possibly explaining why this area at 610.78 was important and why price turned on a dime when they got up there on Friday. So considering where the futures are right now and what that might do to the SPY and where they might open tomorrow morning on Monday, the bulls have some work to do to get price higher up from where they're at currently. And as promised, here are the tracking logs. The first log reflects each level if you treated it per the rules and didn't deviate or take any creative liberties. It's what I call the playing by the rules log. Today would have put you behind the starting line after that last trade with a net loss of 4 ES points. You can see the notes for each trade right here. I'll explain a few things about this log because I added some items that should help your understanding of how these logs work. First, all the data you see here is just from 2025, year to date. So January 2 through Friday. There have been 15 days from where levels were traded per the rules of the strategy. That's shown right up here. The running rate of return, which is currently 9.2%, is right here, and it assumes you started the year with a $50,000 balance and traded a 2-contract position of the ES futures. That's why this column over here is highlighted in this table. So far, after 15 days of trading, each level, your account would have grown $4,600. So here is the current balance, and that reflects the 9.2%. All the other metrics here should be pretty straightforward and easy to understand. Of the 15 days where trades were entered this year, so far, 66.67% ended in the green. Delta of that, 33.33% ended in the red. This little tracker up here just shows the percentage of base hits, fumbles, and TKOs. A fumble is when a level does not hand over a base hit per the rules. Instead, other rules are violated. The trade is usually reversed. So a fumble is an initial loss on that trade, and then a chance to wash some of that loss via that reversal. Occasionally, a reversal fumbles again, and that's a TKO. In boxing terms, that's a technical knockout. That's what I call 2 fumbles in a row, or when a maximum loss limit is hit on any one trade. And just so you know, per my strategy, that limit is 20 points, 20 ES points. It doesn't happen often. If you want to see what that looks like, we actually had one back on January 7 at one level. You can go back and find that recap video and review that if you'd like. So I believe metrics like this are helpful. I hope you'll find them helpful as well. It's good to know what your trading performance looks like over the long term. And if you happen to have a couple or 3 bad days in a row where you give money back to the market, it should be encouraging to know that over the long term, the process will yield very positive results. My plan is to keep the year 2025 shown on this tracking log going forward so the metrics are meaningful. Perhaps occasionally we'll look back at prior years or months or quarters for comparison. There are other recap videos already posted where you can see the rate of return for each of the previous 3 years. All were well over triple digits. I'll include a link to a video at the end of this one that shows that information. That being said, the next log shows my personal trades. It's called the Sam's Trades log, which if you've been following along and watching these recap videos, you've probably seen that they are different than playing by the rules. Not because I'm ignoring my own rules. It's usually because I see reasons to trade a larger lot size perhaps, or hold on to a trade for more than just 4 points at some levels. Sometimes I'll trail part of a position for more points. These are the trades where I take more creative liberties. So the way this log tracks the trades are the same as the other one. The rate of return reflects the same gain, assumes a $50,000 starting balance, trading 2 contracts at each level. So this 78.38 would be what you would have had if you say you had that, if you gotten 22 points, but you were only trading 2 contracts instead of 4, and so forth and so on. I traded 2 on Friday, got 5 points. Shouldn't make sense. I traded 3 one day. I think it was over here on this. 4 points and 3 contracts, $600, so forth. Important to note that since I don't always trade 2 contracts, I just highlight these actual profit or loss depending on how I traded that day. Probably also important to note that the total trade days up here is almost always going to be less than the other log. And that's because I often don't trade every level. I take less trades on average. The best trades are in the morning. Oftentimes, if I get one good trade early in the morning, I see no reason to put any more money at risk for the rest of the open session. So the result is usually less trades with a better win ratio. This is something you should consider if you're taking your futures trading seriously. You can ask yourself if it's even worth getting into trades after 12 noon Eastern. I'll let you decide that for yourself. But if you start paying attention to the strict playing by the rules trades over here compared to my trades, you'll notice that I don't get involved in the market in the afternoon very often. And I think you'll agree that the results should speak for themselves. So that's what I have for today. Kind of went into the weeds a little bit. Hopefully you'll find value in how I'm showing the results of all these trades. I'll have new levels for Monday morning, and we'll do this all over again. So thanks again for watching and following along. I'll talk to you in the next recap video. Have a great rest of your day.